Most people believe wealth is built in good times, when markets are rising, when wages are growing, when optimism is everywhere. But what if your entire working life happens during the opposite? Most careers unfold during uncertainty, during slow growth, during periods where the future feels fragile instead of promising. So the real question isn't how to build wealth when everything is working, it's how to build it when nothing seems to be. Kenji entered the workforce in Japan just as the country's economic miracle collapsed. The stock market had peaked, real estate prices were falling, entire balance sheets were being erased. What was supposed to be a short recession stretched into years, then decades. Wages stagnated, promotions slowed, entire careers unfolded without meaningful growth. This wasn't a temporary setback, it became a defining era. Over time, something worse than stagnation set in. Resignation. People stopped believing investing worked. Cash felt safer than ownership. Job security became the only acceptable goal. Markets weren't seen as opportunities anymore. They were seen as traps. Kenji heard this logic constantly, and on the surface, it made sense. But Kenji noticed something most people didn't want to confront. If companies were fragile, if pensions weren't guaranteed, if economic growth was unreliable, then depending entirely on a single paycheck wasn't conservative. It was concentrated risk. One employer, one income stream, one failure point. That realization didn't make him reckless, it made him methodical. Kenji didn't quit his job. He didn't chase side hustles. He didn't try to outsmart the economy. He didn't believe in dramatic exits. He accepted reality. Work was necessary. Stability mattered. Patience would be required. But he refused to let his paycheck be the only thing carrying his future. So he built a system. Every month, before money could be spent, a fixed amount was invested automatically. No decisions, no timing, no reaction to headlines, just conversion, income into ownership, not local stocks, not exciting opportunities, broad global index funds. Ownership across thousands of companies, countries, and outcomes. The amount wasn't impressive, but the rule was non-negotiable. There were long stretches where nothing happened, years of flat returns, years where pessimism felt justified, years where stopping would have felt logical. Kenji didn't feel confident during those periods. He felt disciplined. The system didn't care how discouraging the news was. It didn't respond to fear or fatigue. It only asked one thing: repeat. When retirement arrived, there was no dramatic moment, no victory lap, no announcement, no lifestyle upgrade. Kenji simply stopped commuting. His monthly expenses were no longer fully dependent on work. His portfolio generated steady income, even in unremarkable years. And most importantly, he no longer needed permission to slow down. Work became optional, not because he escaped effort, but because he replaced fragility with ownership. It didn't make him extravagant. It did something more important. It gave him control over his time. Japan's lost decades are often framed as a warning: low growth, limited opportunity, a broken future. But Kenji's life tells a different story. Stagnation doesn't destroy wealth-building systems. Quitting does. Ownership still compounds. Systems still work. Patience still pays, even when optimism disappears. Most people wait for proof that investing works before committing to it. The solo investor commits first and lets time do the proving, because financial independence isn't about predicting the future. It's about reducing dependence on any single outcome. This is Focused Finance. Ordinary people stories showing how durable systems can build rewarding futures.